For the first time in history, gold has smashed through the $5,000 per ounce barrier. And it's not alone. Silver and platinum are right there with it, hitting their own record highs. From the glittering gold souk in Dubai to the frantic trading floors of New York and London, the message is crystal clear. The world is making a run for precious metals. But hold on, this isn't just some flash in the pan panic buy. This is something much deeper, something rooted in a powerful global feeling, uncertainty. Let's break down exactly what's happening. First, we're living in a world desperately searching for safety. Over the past year, global markets have been on a roller coaster. We've seen renewed fears of trade wars, inflation creeping up, and even the threat of another US government shutdown. Mix in escalating geopolitical tensions and policies that change with the wind, and it's no wonder confidence in traditional stocks and bonds is starting to wobble. When things get this shaky, history shows us a very clear pattern. Investors run for cover, and for thousands of years, the ultimate safe haven has been gold. It's the financial world's bedrock, the asset you turn to when everything else feels like it's built on sand. This leads us to the second major driver, the flight from the dollar. There was a time when the US dollar and government bonds were considered the safest baits on the planet, absolutely uncheckable. But that perception is changing. Erratic fiscal policies, ballooning government deficits, and unpredictable trade moves have chipped away at that confidence. People are starting to question the long-term stability of the dollar. As this trust in paper assets fades, everyone from huge institutions to everyday people is looking for something tangible, something real. Gold doesn't rely on a government to keep its value. Silver doesn't need a policy promise to be worth something. Platinum's value doesn't swing with every political speech. They just exist, solid and dependable. The third, and perhaps the most powerful force, is what the big players are doing. Central banks around the world are buying gold, and they're buying it aggressively. Why many emerging economies are trying to protect themselves. A weaker US dollar can wreak havoc on their trade balances and currency stability. So by stocking up on gold, these nations are building a fortress. They're shielding their currencies, reducing their dependence on the dollar, and protecting their economies from outside shocks. And make no mistake, when central banks make a move this big, the market pays attention. Their massive purchases are a huge signal that pushes prices skyward. Fourth, let's talk supply and demand. While everyone is clamoring to buy, the supply simply can't keep up. Global gold production has barely budged. Mining is a slow, incredibly expensive process. You can't just flip a switch and get more gold out of the ground. The same goes for silver and platinum. It takes years of massive investment before a new mine can even begin to produce. So you have this perfect storm, relentless, surging demand crashing into a wall of limited supply. The economic equation is simple and brutal. Prices have nowhere to go but up. This fundamental imbalance is a core reason why the rally has so much strength. And it's not just the big guys. This rally is happening at every level. We're seeing huge institutional investors, exchange-traded funds, family offices, and wealthy individuals all pouring money into precious metals. But it's also filtering down to smaller, everyday investors. Go to any gold market in the world, and sellers will tell you the same thing. People aren't haggling anymore. They're not waiting for a better price tomorrow. They see the price and they buy. This isn't just wild speculation, it's a calculated move. It's people buying insurance against a world that feels increasingly unstable. It's a hedge against the unknown. Now, you might think this sounds like a mad rush, but experts are quick to point out that it's actually a very calculated and deliberate strategy. Investors are adding gold, silver, and platinum to their portfolios for very specific reasons. They're using them as a shield against currency depreciation, as a defense against inflation eating away their savings, and as a buffer against political and financial shocks. Unlike stocks or bonds, gold doesn't pay you interest. But in times like these, preserving your wealth becomes far more important than chasing high yields. It's about survival, not just growth. So the big question is, Will prices keep rising? Many analysts believe this rally has legs. There are a few key reasons. We do see a sharp rise in interest rates on the horizon that would tempt money back into bonds. There's no clear end in sight for the geopolitical uncertainty plaguing the globe. And there's no quick fix for the fiscal risks that major economies are facing. In fact, major banks like Goldman Sachs are predicting that gold could climb even higher in the coming years. The forces pushing these prices up are deep and structural, not just temporary noise. When you zoom out and look at the bigger picture, you realize that gold, silver, and platinum are more than just commodities right now. They're signals. They are a global barometer of anxiety. They're a sign that trust in our traditional financial systems is weakening. And they're a signal that, when pushed, humanity returns to the one thing it has trusted for millennia. In times of calm, paper promises and digital numbers feel safe enough. But in times of uncertainty, the world turns to solid, tangible, and timeless metal. Thanks so much for watching. If you found this breakdown helpful, be sure to like this video and subscribe for more insights into the forces shaping our world. See you next time.